Morning and on the show right now to talk about exactly that. Pranav, hi, morning, good to have you. Pranav, this loosening for MPS norms for large issues. Tell me what could be the immediate impact if this is to be implemented?
Good morning and thank you for having me. I think this is good news on an overall basis. India is getting ready for large capital companies, so that's a positive. I think this is essentially targeted towards a few large issues which are in the pipeline. So, it's not that we can expect any market-wide impact per se. And just to put this in context, even as on date, there are just 10 companies which have a market cap of more than 5 lakh crore and just 5 companies which have a market cap of over 10 lakh crores. So I think the impact would be limited going forward too. The impact would be limited to maybe, 2 or 3 large IPOs in a year.
Okay, Pranav, hi morning. This is Nehi also joining in. We've seen that a lot of these IPOs, based on their share size, they sometimes take a lot of time to get clearances from SEBI. Do you believe that these new MPS norms or suggestions right now could increase the pace at which larger IPOs are hitting the market, and could they also see the kind of subscription that comparatively smaller IPOs are seeing at the moment?
Well, I think that has not really been the concern. Even if you look at the consultation paper which came out last night, it is not, really talking about the time it's taking for approval per se. I think one issue which has been mentioned is that the market is not able to absorb such large issues. Where I have a slightly different point of view. I think that there is no dearth of, depth in the market, as several issues have shown in the Indian capital market. And even if I go back 20 years, which is 2007, when you had the Reliance Power issue, it attracted subscriptions worth 7 lakh crores. That was just a single IPO 20 years back. Even if we look at some of the issues of last year in 2024, I can remember Bajaj Housing Finance, which attracted a lot of capital. So I don't think depth of the market is really a concern. I think if any issue is attractively priced, there is enough money, there are enough takers for it, institutional investors and individual investors both. The other issue which has been often brought about is also that, if you have a large IPO, then it sucks out the liquidity from the secondary market. I think post-COVID, which is post-2020, if you look at it, the numbers just say it all. Both primary market and secondary market have consistently, outdone each other on a year-on-year basis. So, I think there is enough capital which is waiting and, available to be invested in both the secondary market and primary market parallel. However, one thing I do agree with, which has been mentioned in the consultation paper, which is a very fair point, that a lot of the recent large IPOs which have hit the market already have significant public holding at the time of IPO. We have to also look at this in the context of how the changing nature of the Indian market. So from the traditional promoter-owned companies, you're now getting a lot of companies which are already backed by private equity and venture capital investors. And hence, in these companies, you find that there's already a significant public holding at the time of IPO. So for such companies, a high dilution is not really required. So it's a fair point. And also going forward, minimum public shareholding also becomes irrelevant because they already have a significant number of public shareholders.
Pranav, hi, good morning. Mansi this side. While we shift focus from the equity market and talk about the IPO market, the biggest attraction is that already there is strong traction and interest being seen in the primary market. But along with it, bigger question is which sectors are showing stronger trends to list in the current scenario, especially on consumption boost and new age technology companies?
Well, absolutely. I think, one of the heartening facts of the IPOs that you've seen over the last few years is the broad basing of sectors. And I was saying this somewhere else as well recently, that on one end, you have the new age technology companies. And on the other end, you also have several traditional manufacturing companies coming out with an IPO. So I think what you're seeing is, across the board and we have to put this in context as well, from, in the late 2010s, which is between 2015 till about 2019-20, it was dominated by BFSI. You had a lot of financial services and insurance companies. But I think that's changing. Of course, a lot is said about the new age tech companies. And, our data shows that there are roughly 90 such companies which are in the pipeline, which have either filed with SEBI or are waiting for approval or have announced an intention for an IPO. And at the same time, you're seeing a lot of these traditional companies as well. I think one of the key things which has happened over the last few years is a lot of Indian promoter families have realized the value which comes out with an IPO. from always holding the point that, we don't want to let control go. They have now moved to a stage wherein they're actually seeing wealth creation happening as a result of the IPO. So you're seeing a lot of interest from these traditional, and we have to remember that India is a market which is dominated by, promoter, family-owned companies. So a lot of these companies are also now looking at the IPO market and seeing a lot of investor interest as well.
Indeed it is. Good times ahead, hopefully. But Pranav, good to have you on the show. Thanks for your time today.